Hello everyone, welcome to Just Invest Today, and in today's video, we are talking about Beijing maybe stepping into Alibaba's sector, trying to destroy Alibaba. This is the opinion that this article made about Alibaba. Do you think Charlie Munger is wrong about Alibaba in 2022? Should we be worried, man? So we're going to break down Alibaba, break down what this guy said, and see if we can kind of disagree with him or agree with his article and his premises that he made in this opinion piece about Alibaba. So before we get into the video, guys, can you please like this video, subscribe to my channel? I'm always providing you with so much new content, man. So like it and subscribe. So if you own shares in Alibaba, I think this is a good article to keep your eyes open just to see what is he saying. Do you believe in it? Do you agree? Do you disagree? If you are an Alibaba shareholder, let's read this article. The biggest mistake of Alibaba bulls is to think that Beijing's crackdown against the company is over. Guys, it's not done. The stock is significantly undervalued at the current levels. The problem with this thinking is that it ignores the shift in policy making by the CPC that has taken place in the recent year, which makes the use of traditional valuation metrics to justify a long-term position in the company relatively useless at this point. And that's a big argument that people are saying, is that you can't invest in Chinese companies. You can't use the same kind of valuations that you use in the US and Canada and Europe for Chinese companies. It doesn't make sense because you're always going to need a Chinese discount and you never know what the government's going to do. So you can't use the same value to all these companies overseas, and I disagree with that. Maybe you can put a bigger margin of safety if you feel like the risk is that heavy, but you can still use the same valuation metrics. Like it doesn't change because of the country you're in. Maybe you apply a bigger discount so you're going to pay a cheaper price for that risk to accommodate that risk you're taking. Maybe I can see that point as being more realistic. As Beijing strengthens its grip over the entire industries and becomes a direct competitor to the country's tech behemoths, it's hard to see how Alibaba and its peers will be able to successfully compete with the state in the foreseeable future. So he's basically saying that Beijing is actually coming out with products, with new services to compete with Alibaba, with Tencent, with JD.com, with PDD. This is what the government is doing, so he's going to substantiate what he's saying. Beijing is becoming a direct competitor of Alibaba, so this is his main point, so let's get into it. In addition to becoming a direct competitor in the digital payment space, China is also becoming a direct competitor of Alibaba in the cloud and data fields as well. The cloud business itself. So before we get into that, he's saying that the digital payment space, so yes, the government came out with their own digital yuan, but you gotta think about it like this. The adoption of Alipay and Tencent Pay, I think it's way too big already. Everyone has it. They have a stronghold on that market. Like, those are the two companies you're going to use if you're making digital payments. The adoption of the digital yuan, the government's basically currency, it's not going to take that adoption, and it's not as easy to use as if you're using Alipay or Tencent Pay. So this argument that, yeah, the government came out with their own currency and then people are just going to hurry up and go over there, that's a false premise, because Alipay and Tencent Pay already built their dominance already. Like, they built years and years of building that dominance in that payments sector. So it's not just going to switch overnight. So as people will use it, of course, because it's government backed, people are still going to have that. Tencent Pay and Alipay are still going to maintain that dominance in the payment sphere. So I don't really agree with him in the digital payment space, how Beijing is just going to take it over. You think Beijing really is going to do it better than Alipay and Tencent? I highly doubt that. So that's what I have for that part of it. The cloud business itself is an important part of Alibaba. It's one of the few growing parts of the company which is able to offset the slow growth of other sources of income. Alibaba's latest Q2 earnings reported show that while revenues of its core customer management business increased by only 3%, 11 billion, revenues of its cloud computing business increased by 33% year over year to 3.1 billion and accounted for 10% overall revenue. The growth of the cloud computing business is attributed mainly to increased demand for cloud services within the mainland. Safe to say that demand will remain high in the following years. So the cloud is projected to grow, like the whole cloud market for China projected to grow like 37% in 3 years. In 5 years, I think it's like 33%. And remember, Alibaba has like 40% of the cloud market. So if it sustains that over 5 years, we can literally see we can see that the actual cloud business can start becoming as dominant as the e-commerce business. Can you imagine that? Especially when you think about AWS and how people put a high multiple on AWS. What if people put a high multiple on the cloud business for Alibaba? And Alibaba right now, its cloud business is actually more dominant. It has more of the pie than AWS right now. So the problem is that as Alibaba grows its cloud business, China itself slowly becomes a major player in the cloud computing field as well. So he's saying Beijing is doing their own cloud computing and they're gonna like take dominance. Just last August, the government has ordered all state firms to migrate their data from private cloud providers to state-backed cloud service by the end of September 2022, and at the same time prohibited them from signing new cloud contracts with third parties such as Alibaba. And you have to remember, this is the state-backed agencies. And when you think about Alibaba, they're focused on small businesses, medium-sized businesses, and bigger businesses. So yes, Alibaba had a hiccup in the whole state-backed regulation on their data. But when you think about it, like Alibaba doesn't focus on that state-backed like government officials backing. Like they're not focused on that. They're focused on medium businesses, small businesses, and larger businesses. So even if Beijing comes up with their cloud computing and their cloud data storage, it's not going to compete with Alibaba. Like it's going to be kind of in a different sector. Maybe they lose some revenue in the state-backed firms, but like how much was that really of the pie when Alibaba is really focused on medium-sized businesses, small-sized businesses, and bigger-sized businesses? So I don't see the cloud taking that much from Alibaba. And on top of that, how effective can Beijing really build the cloud? Like we know that when the state builds their own infrastructure, it's not as good as when private companies do it. So you also got to take that into account. So this is the second part. More regulations on the way. In addition to competing in the same businesses, Beijing is also constantly imposing new rules that make it harder for Alibaba and its tech peers to keep their competitive advantages for long. While most of the bullish investors have been forecasting Alibaba's Q3 results in recent weeks, Beijing adopted a new set of regulations that go beyond Q3 and could have an even greater negative effect on Alibaba's financials in the long run. Before highlighting these regulations, it's important to understand why they matter in the first place by looking at how Alibaba is structured. While the company positions itself as an e-commerce company, a significant amount of its revenues generated by providing digital advertising services. In fact, with a 29% market share in 2021, Alibaba is the biggest player in China's digital advertising market. The problem is that Alibaba's advertising revenues are consolidated within the commerce business, which accounts for 85% of all revenue, so it's impossible to know how much exactly is the company making from providing advertising and marketing service to its merchants. Now in this article, the guy goes into saying that how Alibaba's algorithms are not going to work as efficient now, because remember, China is going to regulate tech companies with the algorithms because they're saying they're kind of abusing their power when it comes to algorithms. And then he mentions Facebook, how Apple did that with the privacy services. So he's saying that the same thing's going to happen with Alibaba. Advertise businesses that use Alibaba to the public, but they're not going to be able to recommend people products, not going to be able to actually show people their businesses because the state is actually going to regulate algorithms. They're going to make sure that you're not abusing it to the consumers, to the elderly, to the young, all that stuff. So he's saying that this is going to have a huge effect. And then this comes into play in March 1st, 2022. So he's saying, how do people know how much effect this is going to have on Alibaba businesses when we just seen Facebook's going through all this trouble and all these problems? So that's one of his big arguments. But my argument against that is that could be true. Every Chinese tech business basically uses algorithms to actually show people kind of what they want or what they're already seeing. But when you think about this is affecting every single business. So if it just affects Alibaba, that's not realistic. It's gonna affect Tencent, Alibaba, PDD. It's gonna affect TikTok, all of those companies. So if all those companies get affected the same way, why wouldn't advertisers keep going to Alibaba if it's gonna have the same effect across all those companies? everyone's still on the same playing field. So why would people leave Alibaba? So that's my first thing I'm going to say about that. The next thing I'm going to say is that, yes, the algorithm effect is going to be in place because look, China's next regulatory target, algorithms, the secret of many tech giants' success. Here are some of the provisions in China's algorithm regulation. Companies must not use algorithm recommendations to do anything that violates Chinese law, such as endangering national security. So every company is going to face this. Algorithmic recommendation services that provide news information need to attain a license and cannot push out fake news. The provision was a new addition to last year's draft rule. So remember, a lot of these companies are pushing out fake news. And remember, China is tight on what you're putting out there. So yes, you can't recommend those type of stuff. Companies need to inform users about the basic principles, purpose, and main operation mechanism of the algorithm recommendation services. So you have to actually show them what you're doing and the basic principles. So you can't just hide what they're doing. So a lot of the consumers are going to see and going to know what's happening behind the scenes, and they can actually kind of like turn it off or opt out. Same the way that people were doing with the iPhone. They're opting out of getting tracked. So how is that going to affect Alibaba? Users must be able to opt out of having recommendation services via algorithms. See, that's what's happening. Users must be able to select or delete tags that are used to power recommendation algorithms and suggest things to them. So when it comes to this, the recommendation services, how most algorithms just recommend you what you already see and how you can opt out. Companies must facilitate the safe use of algorithmic recommendation services for elderly, protecting them against like fraud and scams. This was also a new addition to the previous draft. So guys, what do you think about his concerns about Alibaba? Are these great concerns? Are these things that are going to affect your buying into Alibaba, or maybe you're selling Alibaba? Please like this video, subscribe to my channel, and I'll get back to you in the next video. Peace!